you are looking at a chart of the Canadian dollar, and I just want to go through the high of the week reversal trade entry, and it's basically what I refer to as a pump and a dump setup. Okay, you can see that this is the start of the week. Okay, this blue vertical line on my platform represents the start of the week. So let me add some text there so we have a reference point. So that there is Monday, okay, and that starts the week. So we can see that we have 3 days of rise. Okay, so from Monday, Tuesday, Wednesday, the market has been going up, and basically Tuesday makes the high of the week. Okay, and we can see we have a breakout on Wednesday of that high of the week. Okay, we go through there and then we come back into the weekly range. I refer to that as a false break reversal at the high of the week. Okay, and anytime I see this move, as we've seen here on Tuesday, that's a pump. And I'm already thinking that at some point we need to come back to where that pump has started, which you can see we've done already. Okay, we're back here at the start of that pump. And your job is to learn and understand price action behavior so that when up here, we can forecast the change in direction, okay, a shift in market direction, to then forecast a move to back down here, which is the start of the pump. Okay, and I've spoken about this in many of my videos, so look at the videos in the channel. There's many examples of this. In this video, I want to combine the entry technique where we use the 20 simple moving average. So if you're not familiar with the 20 simple moving average entry technique, then I suggest you pause this video, go back and look at the videos on my channel that refer to the 20 simple moving average, because I want to combine the 3-day rise, high of the week reversal, and false breakout with, I want to combine that setup with the entry tick that I'm going to revise in this video, which I've mentioned before using the 20 simple moving average. Okay, so when you start to see the market stop rising after 3 days of rise, you see the market consolidate, okay, and you see the market come back inside of a weekly high. So Tuesday, as I said, makes a weekly high. The market goes through that and comes back in. That's a false break reversal. Okay, we then look for the entry and notice that we have another consolidation on Thursday. Okay, so this is last night's trading. So the trade that I'm about to show you was a trade that I traded last night, and we'll look at the trade journal once I finish explaining the entry. Okay, and so when you start to see the market break down, you're then looking for a pullback to go short. That's the technique. Okay, now you need to go and study the charts. This is a lesson about price action behavior. I'm teaching you how price action behaves. Okay, so once we have all these things in place, you have a market that's been rising for 3 days, you are at the top of the week and you get consolidation. Top of the week means that on Tuesday the market makes a high, and on Wednesday the market takes out that high and comes back inside of that range. Inside of the range means we're back inside of the weekly high. We're no longer above the weekly high, we're back inside of that weekly range from the low to the high. Okay, and then you have a consolidation. Now, right at this point, once you're back inside the range, you're looking for an entry and you're expecting price to move lower. That's your expectation. We have a consolidation, okay, in the next trading day. And I like to trade New York, and especially when I'm trading the Canadian dollar, that's a market that moves in New York. And New York on my platform is denoted by this yellow shaded area. New York market starts at 8 a.m. New York time, and that session ends at 11 a.m. New York time. And the best time to trade that New York market, that New York session, is when the New York equities market opens, which is 9:30 a.m. New York time. Okay. Now, in my videos where I talk about the 20 simple moving average, I've said that when we are expecting price to move lower, then we're looking for a push down through the simple moving average. And what we want to see, the push back up at the right time, and that time is around at 9:30 a.m. New York time. Okay, and this candle, this push up here, is at 9:25 a.m. Okay, that's on a 15-minute chart. I recommend you use a 5-minute chart because it's going to be a lot easier to work with. Let's actually go back and put a line at our start of the pump so we know where our target is. Okay. Now let's switch to, so whenever I see a pump, as I said, when I see a market for 3 days going up, and inside of that 3 days, you'll typically see a move that is very clear, concise, a very aggressive move up. And that's what we see here. Starting on Tuesday, we see this move going up. That there is what I want to see. Okay. And then that entire 3-day move should be a 3 days of rising market. Okay. So when we have all of that in place, I want to see that initial pump. I already am thinking this is where my target's going to be, and I'm waiting for the reversal, the high of the week, false break reversal, consolidation, and then some kind of an entry. Okay, and that entry for me is at New York 9:30 a.m. Okay, so if we now drop down to a 5-minute chart, it's going to be a lot easier to see this on a 5-minute chart. So there is a line that I've drawn. Okay, that's where the pump began on that Tuesday. Okay, and that's going to be our target on the way down. So we can see that we have this consolidation. Okay, from the day before. Okay, as I've explained, that's the Thursday after Wednesday has taken the high of the week, false break reversal, and now we're through into the moving average, and that needs to happen inside of New York. And now all we're waiting for is, so we clearly are moving down. Okay, so there's no question that this is now a broken market. We have come outside of that consolidation, right? And there's no question about that, because clearly we've broken away from all of that consolidation that was up here. Now, what I want to look for is a push back up into the moving average. That's what I'm looking for. And I want to see all of that happening somewhere around at 9:30 a.m. New York time. Okay, so if I check on my platform what time that is, that there is 9:25. Okay, that there's 9:25. So the move back up, we're getting a push back up into the moving average. The moving average is that red line. We have another little consolidation. Consolidations are turning point in the market. Okay, we have a consolidation here, a larger one. Okay, that's a turning point in the market. Whenever you see a consolidation on any time frame, then it's a good indication that the market is about to turn around, or it's going to find some level of resistance at that point. Okay, so for us, we're not necessarily looking for the consolidation at that point. We already have a prognosis in place. We are already bearish. Okay, based on what I've spoken about: 3 days of rise, consolidation, high of the week, false break reversal, high of the week. We're now just looking for an entry. And if you are concerned and you don't want to get in at that level, well, then you can wait for the exact 9:30 candle and wait for the engulfment. So that candle going down after pushing up into the moving average, which is what I want to see and where I want to enter at around 9:30. If you're not comfortable with that, you can wait for the move down at 9:30 and engulfment. And your target is going to be the start of that pump that I've shown on Tuesday. Okay, so just recapping, the entry is you want to basically get into the moving average. So this move needs to commence, right? The market needs to move, the price needs to move in your desired direction, and then you're waiting for the pullback. And that pullback needs to be back into the simple moving average there, that red line, and that needs to happen at around 9:30 a.m. And from that point, we are expecting price to continue moving down, and our target's going to be where that pump started on Tuesday. So I hope that makes sense. Go back and rewind the video, watch the other videos that I have put out on the channel regarding this exact same setup. This time I've combined it with the 20 simple moving average entry technique to make it easier to identify entries. Okay, and let me bring up my own trading journal so you know how I traded this. All of my trades are posted on Twitter, so you can go to @ForexRecipes on Twitter, and you will see I post up all of my trades on there, so you can go and look at that as well. So as I said, we have 3 days of rise. So this is how I journal my trades. Okay, I document the entry, the reasons for the entry, and the exits. So we have 3 days of rise of consolidation at the high of the week. This blue line here represents the high of the week from Tuesday, and we can see we've gone through there, come back inside the range. This red line represents and clearly identifies that we have a downwards trend. Okay, we've got lower lows, lower highs, and then this is where the market starts to break down, and we have a push back up into that simple moving average at around 9:30, and that would be the key point of interest, where I would expect price to now continue this move down until we reach the target, which is always going to be the start of the pump. You can certainly continue, okay, the market can certainly continue moving down from there, but that is the safest exit, okay, safest target. And that was a nice 50 pip move with a very clear setup, right, that I have spoken about on this channel many times. So go back and look at the other videos, look at this particular setup on your own chart so you can identify these in real time and study the charts. That's how you become an expert in price action behavior. Okay, so I will now talk with you in a future video.